Hello everyone, welcome back to my channel. This is Payal Bhagat and I am here to continue chapter 5 of Accounts 12th Commerce. We had been doing a long sum of this chapter in the previous video and we have learned how to write journal entries regarding same. Here I have chosen illustration 18 and we have learned journal entries regarding this. The reason behind choosing illustration The main reason behind choosing an illustration is that I'll be able to create a complete understanding as the answer is displayed along. You'll be getting a better idea how to write and how to prepare the accounts. So today, we are going to learn how to prepare ledger accounts on the basis of these journal entries. Journal entries that we have learned in the previous video. Journal entries were regarding the adjustments you can see here. The 10 adjustments given below the balance sheet. We have written journal entries regarding this. And today we are going to learn how to prepare the ledger accounts on the basis of same. Now, as you all know, every adjustment is having two effects. Every journal is having two effects, that is debit effect and credit effect. So we'll be posting this journal entries in the accounts that we are going to prepare. So as we know, the ledger accounts to be prepared here are the 4 accounts as I mentioned in the videos that I have prepared earlier. The first one is revaluation account, partners capital account, cash and bank account, and a new balance sheet consisting of new value of all the assets and liabilities. Cash and bank account, as I said, is optional. You can see here in the balance sheet assets side, there is no mention regarding cash and bank balance. So you can skip preparing this account. So basically we are going to prepare the 3 ledger accounts here. First one is revaluation account. Accounts have been prepared after preparing all the journal entries. This is revaluation account, the very first account. Second is partners capital account. Finally, balance sheet after admission, that is the new balance sheet. So let us quickly start the process of posting. Before we start with the process of posting, let me revise the rule of posting. The journal entry that you have written is having 2 effects, and the posting is when you will post the journal entries in the particular ledger accounts. That is, the account having debit effect in the journal entry will be written on credit side of the particular account in which you are posting and vice versa. So the very first journal entry that we have written, let us see which is the first journal entry. Yes, it is land and building account debit to revaluation account. As I remember, here the value of land and building has increased. It is clearly mentioned in the narration itself. So the value of land and building has increased here by 28,000. So how to write this journal entry, how to post this journal entry in revaluation account. Another thing I want to clarify is, out of this the two effects that we have written in journal, the very first journal entry, of which I have prepared revaluation account and I have not prepared land and building account. So we are going to write in revaluation account which side. We are going to write in revaluation account, and another thing to remember here is, in whichever account you are writing, the name of particular account does not appear in debit or credit side of that account. You are supposed to write the things opposite to it. So definitely I am going to write about land and building. Land and building is in debit in the journal entry. So in the process of posting, it will appear on credit side of revaluation account. Let us quickly check. Here is the revaluation account. I can see here buy land and building account, that is 28,000. Moving towards the second journal entry, it is revaluation account debit to machine account. Here revaluation account is debited and machine is credited. Machine is credited in the journal entry, so in the process of posting, machine will appear on debit side of revaluation account. Let us check. Yes, I can see to machine 7,000. Now, along with this, another point to be noted here is that in the balance sheet, we are going to write all the new values. This was regarding the posting of journal entries. Firstly, you are supposed to draw the necessary accounts. We'll draw 3 accounts. Then we are going to check the balance sheet. We'll record the opening balances. I can see here the balance of capital accounts is given, that is Patel and Shah. I have written it on the credit side of partners' capital accounts. As capital is always having a credit balance, and also it is mentioned on liabilities, that is credit. Liabilities are always credited. In balance sheet, the balance of capital appears on liabilities side. So here I have partners capital account. You can see here credit side. We have written the opening balance of Patel and Shah. We do not have the opening balance of cash or bank, so we have not prepared cash and bank account. And then we have moved towards the posting of journal entries. You can see we have done the first journal entry as well as second. The value of land and building has increased, and so I have written it on the credit side of revaluation account. And the value of machine has decreased, hence I have posted it on the debit side of revaluation account. Moving ahead. Yes, before moving ahead, as I was saying that we are supposed to write the new value of the assets and liabilities in the balance sheet. So which is the new value of land and building? As I mentioned earlier while I was teaching journal entries, what is the new value? That is book value minus if the amount of an asset has decreased or if it has increased, you are supposed to add that particular amount to the book value. So let us check what is the new value. Let us check in the balance sheet first. What is the book value? Yes, it is 1,40,000. And the journal entry says that the value of land and building has increased by 28,000. So the new value is 1,40,000 plus 28,000. You can see here it is 1,68,000. This is the new value of land and building. Talking about the new value of machine. Here it is 63,000, which clearly means that the value of machine has decreased. The book value of machine was 70,000. Let us check for surety. Yes, it is 70,000. And the journal entry prepared on the basis of an adjustment says that the value of machine has decreased by 7,000. So the new value of machine is 63,000. I can see here. Yes. So this way you are supposed to mention the new value of each and every asset and liability. Let us move ahead with the journal entries. Yes, the third journal entry. Revaluation account debit to furniture account. Revaluation account here has been debited, which clearly indicates that the value of an asset has decreased again. What is the old value of furniture? Let us check. Yes, it is 80,000. How much is decreased? 20,000. So what is the new value? Let us quickly check again. Yes, so the new value is 60,000 obviously. Book value 80,000 minus 20,000. So the new value of furniture is 60,000. So this way you are supposed to solve all the adjustments, or say you are supposed to write the journal entries, then you are supposed to post them accordingly, and you are going to mention the new value of the assets and the liabilities. Now talking about the items which do not have any adjustment related, what about those items? Which value to write? So let me make it clear here that any particular item, the adjustment on which is not given, that means whether its value has increased or decreased, if it is not mentioned, then you are supposed to write the book value itself in the new balance sheet. Yes? To make it easy, whenever you start a sum, put a tick mark over the items which are related to the adjustment. So first of all, you will be writing about those values. You will be writing the values of those items having adjustments. Then, once you are done, the items which do not have a tick mark in the balance sheet, you are supposed to put a tick mark in the balance sheet. So the items which are not having a tick mark does not contain any relatable adjustment. So those items, as they are given in the old balance sheet, you are supposed to write them as it is in the new balance sheet. Okay? Then the very next step is about the reserves and surplus, if they are mentioned anywhere in your question. Here we don't have, but definitely we are going to have it in the sums ahead. Here we have chosen a very simple sum because it is the very beginning of this chapter. And as I said, the reason behind choosing an illustration is to make things clear. I will definitely make a video regarding the sum taken from an exercise. So here, reserves and surplus do not appear in the question. Reserves and surplus are mentioned on the liabilities and asset sides. So moving ahead, once we are done with the process of posting, the last step is balancing the